We're live. Good morning. Good morning, everybody, and welcome to our Savills webinar, an in-person event here at the Expo 2020. For those of you that have been able to attend the event in person, I'm sure you'll all agree how stunning the venue is here today and how breathtaking it is as well. I'm pretty sure when I was walking in, I felt like I was walking into Jurassic Park rather than a lecture hall. But so yeah, huge thanks to Expo 2020 and District 2020 for allowing us to host this today. This is our second webinar of the series, forming part of Impacts. It's a Savills global annual flagship report off the back of Impacts. So yeah, very interesting. This is our first in-person event since February 2020, I believe. Consequent engagements have been up until now just webinars. So we're now combining the two. So we're in person, but we're also live streaming to the millions of people around the world that are tuning in from different countries. So welcome to you as well. This year, our Impacts release centers around the theme Evolve. Whilst Evolve characterizes gradual development, Adapt has also been a theme of the past 18 months. And we've adapted rapidly to cope with the pandemic. As we enter a period of vaccinations and other measures that have helped us to look to the future, our behaviors have also continued to evolve as we and our requirements for real estate has evolved too. If there's one thing that's resonated with me in the past 18 months or so, and particularly since the initial lockdown, is the importance to never jump to any conclusions or generalizations about what to expect. Pendulum swings indicate that trends and adaptations saw in early lockdown have actually, in most cases, already been superseded, and long-term solutions require an evolving mindset. We're quite a fickle bunch, us human beings, and our immediate predictions and feelings are rarely accurate. Today, we're discussing the future of work, and we'll question our esteemed panelists into their areas of expertise and sectors, asking questions like working patterns and whether office space will likely adapt. Will our homes need to adapt too? Do we all want to evolve how we work, or is it different for each generation? Are these changes a good idea, or are they likely to have unintended consequences? As owners and occupiers adapt, evolve and improve their strategy, especially in the workplace. In response to the pandemic, we launched the Savills Office Fit Survey in 2020 to provide practical insights and design-led advice from our global colleagues. A year on, we carried out a follow-up study to understand how perceptions around workplace have changed. As part of the study, we analysed responses from over 100,000 respondents, made up of landlords, tenants, and office workers from across EMEA. And our findings indicate that the office remains vital, not only as to promote corporate culture and success, but it also plays a huge role in the recovery, offering normality and reconnection. Our findings indicate a clear shift in favour of offices as a place that facilitates and supports mental health, promotes collaboration and productivity. And 87% of all the respondents believe that the office remains essential for successful businesses to operate, particularly now post-pandemic. Along with the Office Fit Survey, we also carried out a life after lockdown study to understand how living styles have also evolved in the last 24 months. Whilst there's been a clear shift towards more living space, which has driven demand for larger properties like villas and townhouses, particularly now prevalent in Dubai, proximity to the workplace emerged as one of the top 3 considerations for choosing one's home, indicating a clear inclination towards working in the office. We can discuss these broad findings and more over the next 45 minutes or so with our panelists, which I will now introduce. I'll start with you, Chris. Welcome. I think you're the second. You've done this webinar with us once before, so welcome. Thank you very much. Dr. Chris Payne. Dr. Payne is Chief Economist at Peninsula Real Estate, undertaking research into current trends, opportunities, and challenges in the MENA region and real estate market. Ben Corrigan, First time as a panelist with us. Ben is the CEO of and founder of Blue House Group. Blue House Group is a leading architectural design, interior design, and engineering design consultancy firm. And Ben is passionate about well-considered and robust design. Nadima Mehra is Vice President of Transition at District 2020. Again, I think you've joined us once before, so welcome, Nadima. Nadima joined the Expo 2020 team in early 2016 and is responsible for the commercial development of the District 2020 post-Expo site, supporting its transition into a mixed-use community and innovation-focused ecosystem. Julian Romanet, welcome. Thank you very much. Julian is Deputy Head of Real Estate Investments from Gulf Islamic Investments. Julian has over 15 years of experience in investment and real estate asset management across the world. He specializes in cross-border investment structuring for conventional and for Islamic vehicles. And last but by no means least, our regional CEO, Stephen Morgan. Steve has worked in the Middle East now for over 18 years. As Savills regional CEO, Steve regularly communicates with his counterparts across the world and within the wider Savills business. So it'll be interesting to hear his views of how our business, as well as our clients' businesses, are feeling about their workplace into the future. So let's probably set the scene. And maybe, Steve, if I can start with you. As a leader and somebody focused on business growth in this region, how important do you think the role of physical office space is in order to achieve your objectives?
Thanks, Rich. You know what I think. I am a great believer in the office. I think the office is absolutely key to an organization. I think through the office you drive your culture as a business, you train your people, and that's how you put the soul in your business. So, you know, whilst there has been good advancement in technology, and there will always be a different element to the office, I think for me, the office will be fundamental. And as somebody who runs and leads a business, I think it's absolutely key that people get back into the office as much as possible, as safely as possible. I think human beings are naturally sociable animals that thrive off being in space with other people. It creates the creative ideas, the strategy, you solve problems. And I also think it's really important. I think one of the biggest challenges has been for young people in business through this period. You know, if you're a young person new into a business, how do you get that culture? How do you feel that business? How do you learn? So for me, it remains absolutely crucial and fundamental and key to our organisation as Savills, and certainly what we're seeing from our global businesses. You know, generally speaking, where possible, where offices are open again, people are keen to get back.
Yeah, I agree. Chris, maybe on to you. I mean, what are your thoughts on agglomerate economies in the light of these sort of tech advancements and changing social trends?
Yeah, so, I mean, economists for a long time have recognized the economic benefits of agglomeration. In fact, a lot of work in the last 10 years was done looking at why cities like New York and London became sort of brain hubs, and the multiplier effect that has on the economy. You know, for each innovative worker, there's 5 additional jobs are created. And actually, we can sort of take that model of a city and take it down to an office level. Because I think, you know, it comes back to what's just been said. I mean, you put people together and they have spontaneous discussions and conversations that make a difference. I mean, I know I do. You know, I actually value the time with my colleagues, which is nice, isn't it? But you learn from each other and you come up with new ideas. So I think that's very, very important. Now, you know, we've seen lots of different surveys out there. I think there was a survey in New York that said, you know, 70% of companies are thinking of adopting a hybrid model. Okay, and that may be the future. But actually, with most things, the market will decide. Because if one company says, okay, we're going to have a hybrid model and you can work from 2-3 days a week at home, and another says, no, actually it's back in the office, then we'll see how those two companies perform. And if one performs better than another, guess what? That hybrid model will then revert back to a normal model. And on an individual basis, I mean, I would say, you know, just simple things like career enhancement. You know, I find it difficult to believe that the same opportunities for your career will occur if you're the one working from home and half your other colleagues are in the office. And again, people will see the difference in outcome, and I suspect they'll say, you know what, I'll go back to the office. So sure, there are some jobs that are maybe more suited to work from home, but I suspect we're all going to end up agreeing that in time, I think the new normal will revert back to the old normal.
Do you think that, like we saw, I guess, in the early 90s, where businesses shifted sort of office parks in more suburban areas, do you see there's going to be a growing trend of that, or do you think people are going to likely remain in city centres?
Well, as I said, if you look at the economic geography of cities, there's huge value in being in a centre where you have your contacts around you and the benefits of that. So again, it depends on the industry, but I don't think we're sort of saying goodbye to it's called the London, New York, San Francisco Bay model. I don't think. I think in time people will come back. I really do. I think this is a passing thing.
And Julian, onto you if you don't mind. As a global fund focused on real estate, has GII's investment strategy changed in the light of the pandemic, and are you guys still confident in the office sector?
I think the short answer is yes, we're very bullish. Just to give you an idea, this year we invested a little bit over $500 million in real estate, out of which $400 million was office. In terms of strategy, it didn't change that much. We adapt, yes, but it didn't change. We are investing 90% of what we're doing into income-generating properties. When you're buying a property, you know the income, very happy with it, but the real challenge is to understand how you will sustain and maintain over the years, right? And one of the key, everybody back in the day was saying, real estate is about location, location, location. That's still very true, I guess, but our strategy is really to identify not only liquid markets, but also micro markets where the office is an integral part of a local ecosystem, and which makes it relevant. We're lucky enough to be in an industry where it's real assets, real estate. We can have an influence, we can change things. It's not as if we're buying shares on the stock market. It's a little bit complicated, more complicated to get influence. We can have an influence, but what makes it for us, how can you make it more relevant over the years? And the office is the same, is how is it relevant in its microenvironment? Obviously we always visit the office. We're acquiring and all the assets we're acquiring. And we're always asking people, what do you like to work here? How is it to work here? What are the challenges? What do you want to change? And the best answer that I have is not that, I love the lobby, I love the cafeteria, I love the view from my office, this is great. I already did my underwriting, I know what the building is like. But the best answers are, it's extremely convenient. I don't have any traffic when I come. There is a nursery where I can drop my daughter right there. I have a restaurant where I can have lunch. I have a coffee when I can just meet with my colleagues after work. And this for us is key, because this is the relevance, and this is what will sustain the office. As long as the location is relevant, we can adapt the product. So yes, we're very bullish on the office still.
Okay. So there's clearly some, we also need to sort of future-proof some of these office spaces and some of these buildings, and that sort of leads me on to Nadima. From your perspective as a sort of future-ready development, how has District 2020 ensured that the development meets the requirements going forward, and exactly what Julian said, to foster an environment of efficiency and an environment that people want to be in?
Yeah, I think so. The human-centric element, and I think you can hear it from my colleagues, is critical to any real estate development. But we don't look at it from a building perspective, we look at it from a community perspective, because District 2020 will be a community. It is very future-forward and future-centric, but it's around the individual. So that design thinking was really on how the tenant, the resident, the visitor would interact with the space. And especially when we're talking about commercial, and Julian said it very well, people want to be part of a community. Sure, we went away from that during the pandemic, and that isolation, I think, affected everybody differently, but they want that sense of community, whether it's within the office space or within the broader community. And so a lot of our design elements, when we were beginning to design the city, which is the way we've designed it, is we designed a city that will host an event for 6 months. The event finishes, but then the city continues. So what do residents want? They want access to F&B, schooling. They want to be able to ride their bike. Huge focus on wellness. So we will be the only well-certified community in the entire region and the 5th in the world. And the WELL certification is about the individual and how they interact with their space. We've got 5 kilometers of jogging paths, 10 kilometers of bike paths. We look at micro-mobility because that is, again, quality of life and how the individual is with the space. So that's just from a living perspective. Then we looked at the tenants and that innovation ecosystem that we're trying to curate here. And it's that digital infrastructure that we inherit from Expo 2020 as well, which will enable the smart city technology to be there and be seamlessly integrated within the community for everybody to benefit from. And then again, because of the Expo, I think that's very unique to the country is it's not an office park. It's not a residential community. It's not an F&B destination. It's not a museum. It's everything. So you will come here and you will be able to come to Terra and see the Children's Science Center, and then you'll be able to go have a great meal next door and live close to where you work.
I guess I was just thinking, Dubai is quite lucky in the way it's spread out and where different people are living. There are other cities, more established cities, that when you are jumping on the train in the morning and you've got an hour and a half commute, getting that balance of life is very, very difficult. So that's probably why they're a little bit more pro-hybrid than somebody that might be based in District 2020 who has that balance and can enjoy both, and then feels that it's very important to connect with their office workers. Moving on, I guess, into sort of design. Ben, based on your experience, offices, what we've heard just now, they're definitely relevant, right? So what have you seen in terms of design functionality of office space? Has that changed in the last sort of 18 months or so?
Well, interestingly, in a way, you could argue COVID has done us a favor from a design perspective, because we look at it from a point of view that a lot of the trends that we're seeing now and are being adopted, and the hybrid model is certainly the direction that we're headed into. I think there's almost a global agreement on that from a design perspective, but also from a workplace perspective or occupier perspective. Is that a lot of what we're seeing today were things that we as design consultants or workplace consultants were doing pre-COVID, or encouraging clients to move towards the hybrid model, designing workplaces to be, and I love the term, a destination, not an obligation, right? So the idea of designing workplace that actually people want to be in, it serves their purposes functionally, it offers them choice and a selection of components, gives them a level of flexibility that if they wanted to work remotely, it doesn't necessarily need to be from home, but 1 or 2 days a week, which is already happening in other parts of the world. Friday would often be from home. But what we found pre-COVID was that we were we knew that there were certain sectors that wouldn't necessarily move in this direction, although we would try and encourage them. And there was very much a sense of, well, that's not for us. We've always done it this way, whether we were in legal or investment or it's for tech companies. That's fine for Google, but it's not really for us. What I found really, really interesting, and I'm looking at this from personally from a consultant perspective, but also at Blue House as workplace consultants, what we're delivering for our customers is that, we all went into this abyss almost of COVID. No one really knew what was going on, and we all were pushed to work from home. And it really surprised me and us how, you said it earlier on, I mean, our initial reaction is often not the right reaction. So it really surprised us how we'd only been working from home a month, let's say March or April last year. And we were attending lots of webinars and the new normal and various talks about how there was this common belief that working from home was working. And I think ironically, the only reason it was working was as a result of the workplace, right? So, for example, it was working for the first 2 or 3 months because the culture was in place, the relationships were in place, it was forced upon us, and we knew it was temporary. I don't think we expected it to go on as long as it did, but because of the workplace, it was working. And then we started to see the cracks appear, I think after 6, 7, 8 months, when relationships started to break down or maybe new people came on board. So it really surprised us how quickly organizations around the world, multinationals, were making business decisions based on something that was only a month or two old. So from a design perspective, we take the view that a lot of what we're seeing isn't necessarily new. It's just been accelerated. And there are sectors such as perhaps legal or finance or investment that I suppose had seen themselves as wanting a more traditional workplace, who are now saying, no, we'll leave it down to you. You tell us what we need. So just to surmise, the hybrid workplace is the way things are going. More flexibility, more agility. And we've almost seen an acceptance across pretty much all sectors, whether you be in banking or legal or a tech firm, of what the workplace of the future looks like.
Yeah, I think my sort of personal experience is there, like Savills particularly, we're multidisciplined service lines, right? So brokers work very differently to the property management team, that work very differently to valuers, and so forth. And actually their requirements at office all differ. So some of them were more pro working from home for a couple of days, and others, they just couldn't do their job otherwise. So it's interesting to see that dynamic and how that changed. In terms of, that's in terms of service lines within our business, but in terms of, you mentioned different sectors needing different things. Chris, if I can come back to you. In terms of the future and the economy in this region particularly, what sort of sectors will drive employment, and therefore what sort of sectors will be needing office space going forward, or not?
Or not. I mean, so I think one of the real significant changes in this region has obviously been the quick growth of e-commerce. And I mean, there was a report that, it was MasterCard actually published a report on e-commerce in the region in March 2020. So based on pre-COVID data, and it showed, for instance, that retail, the percentage of retail sales that were transacted online in the UAE, I think it was 15% versus I think mature markets, which was 40%. And the overall level of all, whether it be retail, wholesale transactions that were online, were 4% in the region versus 15% in the UK. So that's obviously an area where you're going to see significant growth. And I think, that's clear, a lot more is being done online. And from a real estate perspective, you can see that, logistics is definitely a sector that's very interesting because of that. And, you could make a very sort of, flippant sort of, long logistics, short retail or something like that. So, and I think, that's definitely a trend from a real estate perspective. I mean, obviously, also because of the weather in the region, retail malls have a very different, they're much more significant in life for 4 or 5 months of the year because it's so hot than maybe in other parts of the world. So again, we're not writing off shopping and shopping malls, but certainly more e-commerce is growth. I think, the UAE specifically is obviously, tourism has been very successful for Dubai. I think Dubai, they took a policy, they decided, okay, we have a young population here and we have a lot of hospital capacity. Therefore, we can actually open up and make Dubai a destination. I think they've been very successful in. I think that's been, something that has been successful here, and they'll continue. There's obviously continued focus on technology and innovation, a lot of investment money going into that. And then Abu Dhabi have seen an opportunity in medical services, which is quite interesting as well. So, this is a part of the world, I think, there's been visa changes as well, and lifestyle changes and rules, which is also very important because, within the UAE generally, it's all about, 85% of the population are expats. And I think there's also making this a place for people to make a long-term home is also part of the UAE story.
Other than the UAE, are there any other countries you're seeing similar things or different things?
Well, I think, in the Gulf, you do tend to see fairly similar things. I think, obviously, Saudi Arabia, a lot of talk about their their ambitions for their tourist industry, which I think is sensible. I mean, I think, there is a country that has the money that the investment that the PIF have is not there for, forever to be looked at. It has to be used to diversify and grow the economy. And I think that they know that, and that's what they're doing. And I think tourism is a sensible option on the West Coast. And obviously, there's been a lot of talk about they're wanting multinational companies to headquarter in Riyadh. And I think that's what we're going to see. There's a lot of effort in the region to try and bring in international know-how and to also grow the knowledge base of the local population while they're doing it.
Yeah, that's an interesting point about HQs into Saudi Arabia. Not too much detail around how that works, but it's been announced all the same.
Right.
You mentioned sort of the young population. We know that Dubai is renowned for its sort of startups and entrepreneurs. And Nadima, maybe if I can come to you for that question. When we're talking about the future of work, you can't ignore those groups. And I know that District 2020 has the Scale to Dubai initiative. So maybe you could tell us a little bit more about that.
Sure. So, our commercial space that we have available post-event is a curated one. And we actually right now are globally speaking to multinational companies that'll be keystone corporations within the development. And it's part of our ecosystem strategy to have industry next to technology and ensure that the industry innovates and that the startups can scale. So that's really the vision of that curated ecosystem. A component of that is Scale to Dubai. And the demographic is a result of District 2020. So our residential component, for example, is very contemporary. It's loft style, it's smaller units than you would typically see in Dubai apartments because we're looking at co-live, for example, as a component because of the type of individuals that will be living and working in District 2020. So Scale to Dubai will encourage companies, startups globally, that meet our industries, which are smart mobility, Industry 4.0. We're looking at smart cities and those industries, and then the technologies of IoT, AI, big data, robotics. And so if they meet and match that criteria and they're established, then we will welcome them to Dubai and District 2020, where they will get free office space for 2 years. And why are we doing that? It goes back to, again, our initiative as a government of Dubai to make sure that we capture that know-how and the knowledge and the organic growth of innovation within Dubai and the UAE. So it's a great place to live. It's very resilient. We are a startup as a country. Dubai is a startup. And that mentality is seen across the board. We see something, we want to do it, we deliver on it. And I think that's going to attract startups globally because they want to be part of that environment. And it's a springboard to the entire Middle East, North Africa, Southeast Asia market. And I personally have been speaking to many, many CEOs that are considering relocating or moving a component of their business to Dubai because of the resilience that it's shown over the last year and a half.
Fantastic. Lots of opportunities for them. I guess going back to you, Ben, you mentioned in your initial comment about different sectors, and you mentioned legal and finance. Are they delving a little bit deeper into sort of their design requirements? Are they being a bit more, what are they being more flexible? They're being more fluid in their design preferences. What are they now asking for that maybe they weren't asking before? And what's resonated with you?
Well, they're certainly being much more open-minded and much more open to what we may have been suggesting pre-COVID. So we may have been encouraging them in a certain direction. And it's been mentioned by all the other panelists this morning, the social side. And was it Stephen Covey who said, culture eats strategy for breakfast? And I think, one thing we learned from working from home during the COVID period, particularly last year, is that it's very difficult to build culture and a sort of social infrastructure within a business online. And again, there's some nuances depending on which sector you're in. But I think what COVID has done, I'm a big believer in social interaction and the idea of, we design offices to encourage collisions, for example, which is a word we love. The idea, one of the other panelists talked about it a moment ago, innovation rarely happens in isolation. It's often a group of people around a table, a collision in the breakout space, a quick conversation, perhaps even after work or in the coffee shop across the road, right? That's where the magic really happens in an organization. Yes, there are times to focus. You might work from home or work remotely for 1 or 2 days of the week where you really need to get your head down. Or even within a cubicle within the workplace where you say, I don't want to talk to anybody, I just need half a day on this report. So to answer your question, I think what it's done is it's opened all sectors' minds, regardless of what industry you're in, to the fact that we really need to be designing workplaces that not just build culture, but enhance culture and design them as a social space. That I could work from home today, but actually I don't want to. I need to talk to these people. I need to bump into these people. The workplace gives me everything I need in terms of components. First 2 hours I'm in a meeting. The next 2 hours I'm focusing. So whereas previously we would have seen quite a clear, we cover hospitality, workplace, retail, F&B. Those are our sectors. And 10 or 15 years ago, a workplace was a workplace, hospitality was a hospitality, and there was even a distinction between you couldn't be a workplace designer and a hospitality designer, whereas we're now designing workplaces that are actually all of those things. So whether you're in legal, whether you're in banking, whether you're in tech, whether you're a startup, what COVID has done is it's accelerated trends and it's opened minds. When we're taking a brief with a client on a project, pre-COVID, we may have had a lot of resistance from certain sectors. Right? That sounds great, but it's not for us. Short answer to your question is what it's opened everybody's minds to what we need to be doing to drive culture, social interaction, and those collisions that drive innovation.
And to promote those collisions, ironically, do you need more space to do that?
No, and I think we don't necessarily agree with the idea that I think initially this idea when COVID was, when we were in the midst of it in, let's say, summer last year, there was all these big banners that the workplace is dead and working from home is working and all of these things, which I thought was hugely premature. We'd only been working from home for 2 months at that point, maybe 3 months, but you can't judge, as you touched on, Chris. I mean, it'll be interesting to see the results of, as I say, an organization that is a hybrid, an organization where everybody's forced to come in, and maybe another organization where they're 100% at home, and then over a 2 or 3 year period, let's see which one of those is the most successful. Not just financially, but in terms of engagement, CSR, cultural engagement in the community, etc. All the other measurements. But I think we'll. I think time will tell. It'll be interesting. We won't really know for I think 2 or 3 years what's really worked and what hasn't. But again, to answer your question, what we're seeing is workplaces aren't getting smaller. They are becoming more diversified within. So you might have almost like a Lego set is a term we use. You have everything you need within the workplace, and so part of that workplace might feel like home.
I think it goes back to my point at the beginning when I mentioned about unintended consequences, that we're only going to sort of see those in 3, 4, 5 years' time.
Yeah.
Some of them will be positive,
Yep.
others probably not,
Yep.
and it'll be interesting to see how those develop. Julian, if I could come back to you, in the light of how working styles and economies are evolving and changing, what are the few parameters you consider whilst choosing, I guess, an investment destination?
We, as an industry, I think that the industry has been, for the past, I mean, I've been working for almost 15 years now, and the industry has been evolving tremendously in the past 15 years. I'm talking real estate investments. At the beginning, when I started my career, it was extremely empirical. We had barely no data, right? I remember sending people, counting the number of cars passing by the building to understand whether there was good traffic, bad traffic, that kind of things. It was fun. Now, especially in PE, it's all about numbers. It's all about data. We are submerged by data, actually. And our crisis is how to find the right algorithm, in a way, how to put all this data together to select the right place to invest and the right building. We are cross-referencing many data, and basically, I mean, at the end of the day, we are in a PE investment business, it's all about numbers. Main criteria would be, of course, liquidity of the market, leasing liquidity, prospect in terms of demographics, GDP, access to healthcare, access to education, a lot of different parameters. But I think where the industry got lost in the past 15 years is that now we're trading real estate a little bit like a commodity, which is great in some aspects, because it's true that some aspect of the real estate could trade like a commodity, all right? But we forgot this empirical background that makes, I think, our job very interesting. And most importantly for our clients, the actual investment fruitful and sustainable. And I think this was already the case before the pandemic at GII, and it's still more and more the case. How do we fit in the equation these qualitative, basically, measures and qualitative items? As we said, we talked about flexibility, we talked about wellness, for example. All these questions that come back into the table, now how do you fit them in the equation? And yes, it's all about the data, but I think where we are excelling at Gulf Islamic Investment is really inputting this component of all these qualitative items and what makes our investment successful and most importantly sustainable in the future. Really, again, wellness, flexibility, agility, feedback from the tenants, et cetera, which are hard to quantify always.
Yeah, exactly. I completely agree with you. I think from my side of the business here at Savills, that sort of stakeholder engagement, going to talk to tenants, businesses, homeowners, exactly what makes them tick, what attracts them to something is that quantitative information and data that we sort of crave, because that's ultimately some of the best stuff that you can get. And I guess that leads me on to what we're seeing from our corporate clients at Savills. And Steve, when it comes to their office requirements, have you in the corporate occupier service line, have we been busy?
Yeah, so I mean, there's a lot in that, Rich, so I'll try and break it down into some constituent parts, but certainly from the UAE and the Middle East, our corporate services team has been as busy as they've ever been over the last 12 months. We did some of the biggest deals that we've ever done in 2020. And I think that's a combination of reasons. I think the UAE had a good COVID, if you like, and it was well handled. And at the same time, I think, occupiers perhaps use the opportunity to reorganize their space or re-gear their space. And so, it's been a big continued interest in office space over the last 18 months or so. What we're seeing globally from our investors and the investment side, and I was talking to our regional head of investment on the way here today, office is very much still an asset class that is of interest. If you look at the sort of three significant asset classes, you've got perhaps retail, logistics, and office. Retail is going through a global renaissance for various reasons, slightly different in this region, linked into the positive renaissance that logistics is seeing, right? But logistics is really expensive at the moment. It's hard to get into, and everybody's chasing it. So, if you're in the market for a solid commercial asset, then office space with long-term leases to blue chip companies is still very attractive, and we're seeing a lot of that. And it almost feels to me on a global perspective. And I think, to Ben's point, that it was quite interesting at the beginning of COVID. We saw, didn't we, different approaches from different parts of the world, and we had a number of particularly US tech firms coming out saying, oh, we won't be going back to the office till 2022, or big call very early on, and I wouldn't be surprised if they're not kicking themselves now.
Yeah.
But interestingly, it almost feels on from a global, what we're hearing from our global capital markets teams is that COVID doesn't really. It's almost a 2020 problem. What we're seeing, interestingly, what's changed significantly over the last 12 months is ESG, and investors are looking more and more at the sustainability of buildings and how that's going to play out going forward. So I think the office is very much still alive. I think office as an asset class is very much still key to global investors. I think, if you look at what we've seen across the UAE over the last 18 months or so, if you take Brookfield Place, for example, fantastic building, well designed in a good location, leased up during lockdown pretty much, and it's now 80% leased up. And there's good reason for that. It's well thought through, it's well designed, it's proper international grade A space. What we will see, I think, is secondary and tertiary offices struggle. But I don't think that's a bad thing. That's a natural property cycle thing almost. So, we're seeing strong demand. I think we'll continue to see strong demand. And I think the office is very much here to stay for all the reasons we've heard about today.
So if the corporates around the world are looking to set up here in the Middle East and are certainly drinking the Kool-Aid here in Dubai, Chris, going back to you, what's driving them to do that? And as I guess your perspective as an economist, what's the sort of the broader themes of the economy and sort of commerce going forward that's attracting them to this part of the world and particularly the UAE?
Well, I think, if we talk about the UAE first, I mean, I think, I mentioned this before to some extent, which is that, particularly in Dubai, there was it's a young population, okay? And it's a young population that, there's hospital capacity. So Dubai made that decision to open up. And I think I know cases, anecdotally, and there's obvious evidence on the roads that people have come back, and that more people have said, you know what, whilst Europe, for instance, sorts itself out, I'm actually going to base myself here. I can get visas, I can set up a business, I can do a number of things that the country has done a lot to facilitate, to make easier. Ease of doing business, setting up businesses has become, a lot of effort's gone into that to make that straightforward. So, from in terms of as other countries grapple with the issues that have come up, Dubai is actually an easy place to come and quite honestly sit it out. So I think that's been very beneficial to Dubai. And I think, the other thing, and I'll say I think this came up earlier about the residential market. I mean, the fact that you've seen such activity in villas and at the high end is actually a testament to the fact that Dubai has successfully put itself on the global residential map. So it is benefiting from the same trends that we've seen sort of outside of New York, for instance, where people are looking for more space to live, or in suburban areas, commutable areas outside London. Actually, Dubai is one of those places where people said, actually, this is I can, it's a bolt hole or whatever it is. So that's very positive. The broader macro trends, if I say a little bit about that, I mean, one of the things that's really no one expected at all. No one thought that here, we'd be sitting here now talking about inflation, stagflation. I mean, it's just one of these incredible things you just didn't see at the beginning. Everyone was talking about another economic collapse, deflation, blah, 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 debt crisis. And of course, that's why the central banks stepped in to resolve that. So, but in fact, of course, COVID has led to horrendous supply bottlenecks. I mean, I had a personal, over last summer, I was in the States, I couldn't buy a road bike. I could not buy a road bike in the States. There aren't any. And that is an example that I personally know of the supply bottleneck. It's not surprising then that prices are going up significantly in this environment. And that, globally, from a real estate perspective, I mean, that's obviously could be problematic. If you go back to the 70s, let's use the 70s as an example, that stagflationary period. I mean, ultimately, if people decide central banks are going to let inflation run, not worry about it too much, then of course real estate and other asset markets are a great hedge. And so we'd expect to see continued price rises and a good market there. If people, on the other hand, decide that actually this inflationary problem is going to embed itself in people's expectations, and importantly, in wage rises, so you start having those wage price rises, that vicious circle, and people believe that central banks are going to act, then at some point, we will see, well, we've seen interest rates and bond markets rise already, and of course that then can cause problems in all asset markets, equities, but real estate as well. And at this moment, I'm still on that front. I'm more positive. I think probably some of these supply issues will resolve themselves. But all the while that of course, it's not a bad thing. US dollar depreciation, if we see that, will be good for the region, and inflation is very good for oil prices. And fundamentally, higher oil prices give fiscal leeway to governments to increase spending in the region. It's critically important. So actually, at the moment, the Gulf is having a bit of an economic renaissance because of that.
Yeah, it certainly is. Nadima, coming back to you, we've had a number of the panelists mention about sustainability, human-centric, ESG. How do you see this advancing, this sort of sustainability model advancing into new models going forward in the urban development?
So I think District 2020 itself is a great example of how we've looked at sustainability, number one. So we built for permanence. 2 million, roughly 2 million square feet of built-up areas is built and ready to be repurposed once the event is over. So as Expo, we didn't build only to tear it down or just leave it. We built with a thought and a system in mind. So I think that's a great testament to the fact that we look at things sustainably. And then we look at the sustainable growth of the development. It is not, for us, I'm talking now more about development sustainability versus ESG. While that is a big component of it, for us, we're not speculative, and we have, again, a lot of land that we will develop over the course of 25 years, but it will be based on demand. And when you look at it from the traditional green economy lens, from a smart city perspective, so that is one of the industries we focus on, and we encourage companies that want to set up, that are in the smart city space, to set up. A natural subset of that is businesses that are in sustainability that will support smart city growth. And just a case in point, everything that we've built is on a smart monitoring system. We're using Siemens MindSphere, for example, to gather that data, which is so important to be able to monitor usage of electricity, water, and that's across just 86 buildings. So you can see that, and then we've built from a master planning perspective. with the thought in mind that eventually we will move away from parking requirements that are quite onerous on developers right now. We will see, hopefully, less car ownership, and that'll resolve a lot of the traffic issues that we're seeing, regardless of how much we've, for those of you that live in Dubai, you will have seen there was a lot of construction, road construction, and a lot of that was infrastructure that was being put in place to support not just the expo, but Maktoum International next door, which will be one of the largest airports in the world when it's completed. So we looked at it from the future of mobility and building roads and networks that will allow autonomous vehicles eventually to circulate on our roads versus traditional vehicles. We have the park spaces and the green spaces. We're looking at urban farms, for example, for the residents and tenants. So there's elements of sustainability that we have throughout the site. And you can see for us, for the customers that we're speaking to and the tenants that we're speaking to, it's top of mind for them. It's very important that they want to contribute now. We're sitting in Terra, which is a pavilion at the expo focused on how we have to live harmoniously with the planet. So I think it is top of mind, and you're only going to see it grow.
Sure.
Rich,
Yeah.
I think if I may just interject there, I think for the title of our seminar, we talked a lot about COVID today, and as terrible as COVID has been globally, we will move on from COVID. We'll learn to live with it. It may never go away. But sustainability is, in my opinion, a much bigger topic in relation to the future of the work, because it's not going away. It's only going to get more and more important. And if you're a global investor investing in an office space, you better make sure you're investing in one that's sustainable, because if you come to sell it in 10 years, you're going to struggle, or you're going to struggle to lease it, because global space occupiers are going to become more and more focused on occupying sustainable space. And I think that's really the key of the future of work.
Absolutely.
That's what we're hearing loud and clear from our colleagues around the world. It's come on leaps and bounds over the last 18 months. And we're a little bit behind in terms of the region, in terms of understanding the impact of that, I think.
Well, that I guess segues quite nicely into the next question for Julian. Post-acquisition of an asset with ESG, sustainability, and everything in mind, what is the asset management strategy? Do you retrofit? How do you manage that asset going forward?
I think, as I mentioned, we're investors mostly, for the most part, in income-generating assets. So, as you rightly mentioned, of course, it's good to buy with some income, but if we're not able to sustain that income, that'll be obviously a difficulty going forward, especially on the exit, right? So, I think there are three key parameters for us in terms of asset management that we're looking at carefully, aside from the traditional, I'd say, monitoring of the properties, refinancing, et cetera, et cetera. We're looking, and you understood, I think in the previous statement I made, the experience. The experience of the tenants are an integral part of our asset management monitoring. And we're intensively using PropTech in order to make sure that the experience is monitored and is improved and adapt across the years. That's one. The second aspect of it, that's always what I'm telling to everybody. I think that the main difficulty of my job is that I'm at GII, we're investing globally in the local business. All right. So you understand the difficulty of buying an office as we did last year in Paris, for example. It's great. Very proud, French myself, but how do you monitor this asset sitting in an office in Dubai? How do we make sure that we not only hire the best in-class managers, but they are doing the job properly in a way? That would be the second parameter. And the third parameter going forward is obviously upon acquisition, we are evaluating this ESG criteria. The good thing, as I mentioned, with real estate is that we can have, again, we can have an impact and we can modify, adapt, and be agile. When it comes to the E component, that's almost the easy part, right? There are international standards. How do you make your building where it is right now? How do you bring it to the next level? It's technical, almost. When it comes to the S, that's where it's important for us, I mean, coming back to the sense of community, how do we not only buy a piece of real estate, a standalone piece of real estate, but a piece of real estate that communicate within the micro environment around it? And how do we have an impact? How does this piece is essential to the community? How does it feed on the other component, but how also the other component are feeding on this one? How this cycle is working? And we're monitoring that very carefully. And just to find out, I mean, the G for us, that's basically our core business. It's how do we control, and again, that's intensive usage of prop tech across the board in order to make sure that we have the right level of control and counterbalances in order to make sure that we're monitoring this properly. But basically, to summarize, ESG, best-in-class people on the ground, and focus on experience through prop tech.
I think we've got time for one question. Ben, if I could ask you, I mean, with the sector that you're in, the business that you provide, what are your, as a business, what are your sort of working preferences and environment to do well in?
As Blue House, you
Yeah.
mean? Yeah. Well, I mean, I think as a creative firm and as a creative agency, interaction and those collisions and that social interaction is key. But I don't think we're unique necessarily. Yes, when we were working at home, collaborating and brainstorming was very difficult online. It almost didn't work, or it didn't work as well as it could. But I don't necessarily. So again, I'm a big believer in social interaction. I'm a big believer in connection and those collisions and all of those things. And I think it's, frankly, it's essential for our industry. But again, I don't think we're unique. I do think that organizations, whatever sector you're in, are putting greater value now, more than ever before, on culture, engagement, the social aspect of business. It's, gone are the days where, as a law firm, we must be in cubicles because we need quiet, right? Or as an investment house, or, but tech company. I think gone are the days where we distinguish like that. I think we're getting very much to a point where they're becoming much more human environments. And the reality is in any given 8 or 10 hour day, we probably need 5 or 6 different environments within an environment, whether it be focus, meeting, collaboration, encouraging collisions. That's a reality. So from our point of view, look, I love being in the office personally, and we allow a level of flexibility within Blue House. But I don't think we're unique. I do think that, and there are some nuances, obviously, across sectors, but most people I've spoken to actually are enjoying the hybrid model. That I think is the outcome of where we are.
Well, look, it sort of concludes, I guess, my questions. Clearly, there's some themes evolving there, and that social human side has definitely come out from everybody. So putting our people first is paramount if we want to be successful, right? So I think that's a takeaway from today. Look, on behalf of Savills, thank you very much for joining us today, our panelists. It's been a great morning. Thank you for everybody who made it today, and also the people who are logged into the live stream. Please do, after this, in terms of forming a further opinion, look at our website and the Savills Impact Report. And otherwise, have a very good day. Thank you very much.